Hello and welcome. My name is Dheeraj Juneja, here to discuss the debt market outlook for the month of September. And for that, we have with us Mr. Abhishek Bisen, Head of Fixed Income with Kotak Mahindra Asset Management Company Limited. Hi, Abhishek.
Thank you, Dheeraj.
Now, my first question is that what we have seen recently is the US market yields dropping to a one-year low. As a result, our yields dropped too. What's your reading?
So while we all look at the US yields but we must remember that US yields are more of a guiding factor than the driving factor. So while they have dropped 1 year low, but since India is not reacting in directly proportional to what is happening to the US, so the downward reaction is also likely to remain limited. However, much of the noise and the uncertainties are away now, so it's a positive move. And once we have the policy next month, much more clarity is expected to emerge, and the direction will be much more clearer from now.
Now, your take on the commentary from Fed chair from Jackson Hole?
It has been, market has been waiting for the Fed pivot for a very long period of time. And the data has been puzzling markets and in fact the central bankers as well. Of late, the data has been quite favorable in terms of rate cuts to start getting delivered. And that is what the Fed chair has indicated very clearly in the Jackson Hole speech. And in September, we are likely to see the first rate cut. Now, the only question here is that the dot plots have been suggesting only a 25 basis point cut, while the markets are pricing in 100 basis point. So what kind of setting the FOMC is likely to do and likely to change the dot plots has to be seen in the September policy.
But Abhishek, the most recent inflation reading was quite positive. What are your thoughts on the same?
So inflation has been a key factor as far as the MPC setting is concerned. And if you observe the current data and the upcoming data, largely it is driven by the base effects. However, the expectation of the central bank was much higher than what it is likely to track. So it is likely to be much softer than what was expected by the central banks. Now, given the factors such as the FOMC, which will be already done by the next policy, we will have 2 data points which will be much softer and much lower than what the RBI has been expecting. The expectation was around 440 for the quarter, and we are likely to be 4 or below 4 as far as the headline CPI is concerned. So given these factors, the MPC is likely to be much more dovish. There is a good possibility of a stance change and clear indication in what kind of cuts are going to come in as likely outcome of the MPC in the October.
And lastly, your advice to the debt fund holders?
Yeah, so we've been advising our debt fund holders that one should look to increase duration because we have seen the peak of the hiking cycle, and from here on we are likely to see deceleration in rates, which means much better returns than just the accrual income. And we continue to advise investors to remain invested and increase here on as well, because there is good amount of upside available from the current levels as well. And this is, more importantly, this is likely to sustain for a longer period of time because this is largely driven by the core fundamentals of the Indian economy.
So stay invested, good news will follow, right?
Yes.
Well, thank you so much, Abhishek, for your time. And thank you for watching. Stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.